Hello and welcome to another episode of Phillip Research in 3 minutes. This is Paul Chew from Phillip Securities Research. In this episode, we will discuss about Singapore Budget 2020. On the key highlights, Singapore GDP growth rate for 2020 was downgraded by around 1 percentage point to a lower band. 2020 growth rate is expected to be slower at 0.5% against last year's 0.9%. The fiscal deficit will also balloon to almost 11 billion under the budget for 2020. The planned 2 percentage point GST hike will be pushed forward to 2022 to 2025. On the key stimulus for 2020, there is the 4 billion stabilization and support package. There are multiple parts to this package, but the largest is spent on wage support for our local workers. Other incentives include working capital loan support for SMEs, corporate income tax rebate, faster tax write-downs on equipment, property tax rebate, and other sector-specific measures. The second part of the stimulus is the care and support package, which is essentially larger cash handouts to local households. On our views of the budget, it is the largest fiscal deficit boost on record for Singapore, and the government said it can and is prepared to do more if the situation worsens. On our equity strategy, the budget alone does not change our estimates. It does provide some cost relief, but the demand challenges faced by listed companies does not change. Nevertheless, there is a beneficiary to the budget. Supermarket operator Sheng Siong will enjoy a subsidy on its employee wages, and the higher cash handouts to households will raise their purchasing power for necessity shopping. On other sectors with notable mention in the budget include property tax rebate for commercial properties, but this will essentially be passed back to tenants. Construction sector will benefit from a new 5 billion fund to prepare for rising sea levels. Earlier announcements suggest an allocation of almost 100 billion to be spent for this environmental challenge. For the consumer sector, there are earlier mentioned benefits such as wage relief for employees, property tax rebate for retailers, and cash handouts to households. Airlines will receive landing and parking charge rebates. The telcos, through their cybersecurity divisions, will benefit from additional 1 billion set aside by the government for data security. For the full report, please visit our website, stocksbnb.com. Do like this video and give us your comments below.